Welcome to today's Social Mobility Talks podcast. And I'm delighted to say that today we have David Richards as our guest. He's the co founder and managing partner of Yorkshire AI Labs, a venture capital firm based in Sheffield. So he can give us a quite unique regional perspective to our discussions today. David's background is as a software engineer with 25 years of executive experience and also a stalwart supporter of British technology. Outside of work, he's a board trustee at the David and Jane Richards Family Foundation, and that's dedicated to educating and empowering children. He's also a co founder of Laptops for Kids, bridging the digital divide for underprivileged children by facilitating the donation and distribution of used devices for remote learning. So, welcome, Dave.
Thank you.
So, David, you'll know as well as anybody that there are enormous variations in levels of productivity, investment, and opportunities right the way across the UK. And as you know, the SMC have been looking at the evidence, and we've switched our focus away from the university route as the only path to success because it's too narrow for the majority who can't or won't go on that journey or leave their area, which isn't the same as saying that it's not really important. The university education is still very important. However, we believe at the Social Mobility Commission that there's a strong relationship between social mobility and economic growth and innovation, and that we need, as a country, an expanding economy that creates these opportunities, and that those opportunities are going to be much better where there's a focus on new technology, on innovation, and on new industries. And I know that you've been involved in lots of new industries in the past. So we also know from our State of the Nation work that there continues to be some very what I call distressed areas, but many call them disadvantaged areas. Generally, they're post-industrial. Generally, they're coastal or rural areas, and their disadvantage is persistent and very long-standing. So, governments have tried all these initiatives over the years, and they've tried so many schemes to make a difference, and the latest of which you probably know is levelling up. But there's been huge chopping and changing around these initiatives and interventions, and there's been a lack of continuity and a lack of sort of see through. So that's where we are in a sort of helicopter view of the sort of where the social mobility sort of commission sees things. Um, Now, you very kindly joined our economic growth and investment group. Now, we've gathered together, businessmen, entrepreneurs like yourself, academics, a range of different local and regional government representatives, and we've got this group together, and we're hoping to make recommendations and improvements to what's been going on in the past. Now, somebody like yourself, yeah, who's got lots of other things that they could be doing. Why have you decided to come on board and spend your time doing this?
Thanks, Rob. It's a pleasure to be here. I think two main reasons. The first one is I spent 23 years living in Silicon Valley, probably in a complete bubble, without paying much attention to what was going on in the outside world, or actually in the UK as well. I came back here during the pandemic because my daughter decided that she was going to go to university in the UK, even though she was born in California. And we'd bought a house out in the Peak District near Sheffield, so I went to live there with her in sort of 2020. And I got a phone call from the editor of the Sheffield Star, the local newspaper, who said, "We've got a huge problem because we've got 15,000 school children who can't continue their education because they don't have access to any technology that allows them to do that." And that was a huge bolt of lightning to me. It was a huge shock. And she said, "Can you help?" And I created a scheme called Laptops for Kids. And the end of that story is a nice one. We actually managed to source, working with all the local authorities, 15,000 laptops in less than 6 months. So every single child in South Yorkshire were actually able to continue their education. And I would argue, actually, that was the greatest achievement in my career. Never mind taking companies public or anything else. That actually outstripped everything else. And as I went through that journey, listening to some of the horrific, actually, stories of children sharing the phone of their mother, who was a cleaner in an old people's home, who wanted to work, didn't need to because she could have claimed benefits, but actually wanted to work. And the children who wanted to go to university were probably not going to be able to because they were just sharing a telephone in the evening to try and do homework. So all those assumptions, my sort of the view of the world changed quite dramatically as a result of that. That was the first reason. The second reason is more practical, more business focused, because I think there is a tremendous amount of untapped talent and opportunity in the north of England. In my region, in Yorkshire, South Yorkshire, Sheffield, we created a venture firm called Yorkshire AI Labs, where we're specifically looking for businesses that we can pivot using artificial intelligence. And I am astounded at the lack of competition that we have. And the quality of spin-outs from the Gritstone universities, Leeds, Manchester, Sheffield, is tremendous. But the amount of investment following them is almost zero. It's frightening how little investment we have coming in, private investment coming into the region.
So we'll come to that a bit later on, but I mean, so a lot of your experience and knowledge of this was born out of the COVID crisis and led to your own sort of innovation and entrepreneurship, really, in setting up this laptops scheme for all those kids that couldn't access them.
Well, yes, exactly. So when I was approached as an entrepreneur, you see a challenge and you say, "Excellent, but let's get, there's a mountain, let's go and climb it." And we treated it as an industrial, because it was an industrial scale problem and needed an industrial scale solution. So we asked for donations and we recycled people's laptops. And we partnered with a company that provided secured certified deletion of the laptops. So we ended up getting literally donations of thousands upon thousands of laptops from government in some cases, from corporations, companies, and we also managed to work with Dell, and we managed to get the entire supply chain of specially ruggedized Dell computers that were coming into Europe directed to South Yorkshire. So they got first dibs on all of them.
So you're an entrepreneur yourself. You know a lot about. Actually, my background is entrepreneurs setting up and taking companies to market as well. But I'd be very interested to know why there are so few entrepreneurs in some of these regions around the UK that are really struggling. What is it that is? Why are people more entrepreneurial in, say, London than they are in other parts of the country?
So I don't think the premise is necessarily true. I think people want to be entrepreneurial, but they don't have access to capital markets in the same way that you do in London. And so I think there are two reasons why. I think the first reason is you have to have seen it, and it's this multiplier effect. When you've seen and worked with an entrepreneur, you see actually it's not that difficult. It is feasible for virtually anybody to be entrepreneurial. It's somewhat of a mindset, and it's somewhat of a skill set, and it's somewhat knowledge. So if you can give people the information, it's amazing what could happen. I mean, that there was a company that we recently took public in Dinnington that were actually formed where the former Dinnington Colliery used to be. So there's a business park there, and a business called 53 Degrees North, now called Intellium AI. So we helped them for a very short period of time. So we just introduced them to capital markets, taught them how to access capital markets. Within 6 months, they were good enough to become a public company. So sub 12 months to take a company from that point to being a public company, surely you can do this over and over again. So we simply don't have to get entrepreneurs, you need entrepreneurs, and we don't have enough. So we need to start making them in the north of England.
And how do you go about making an entrepreneur? What's in the recipe that you need to put in the oven and bake and come out as an entrepreneur?
So the frustrating thing that I find with the UK venture industry, unfortunately, only 5% of the people running capital in the UK have actually started a business before. So they're not going to recognize, to be honest, a good entrepreneur if they see one because they're very focused on historical financials, whereas entrepreneurship is almost always forward looking. So we need a source of capital and access to capital to be more entrepreneurial in itself. And then secondly, we have to focus on helping would-be entrepreneurs become entrepreneurs. And that means people like me who've started, set up, successfully grown, scaled businesses, taken them public, to actually help the next generation come forward. Now, we don't have enough of people like me and you in in the north of England, so we have to artificially manufacture them. That's what we're trying to do.
So is that a form of sort of skills transfer, mentoring, or is it because I mean I know you've got the investment business and you're looking for that sort of, but is it wider than just investment?
Yes, it is. It really needs a different type of education. It's more hands-on, it's more practical. You know, the way in which you run a business in the earliest, you can't really get from a book. You know, you can read 20 books about it, but it's not really going to give you the information that you need about how you scale a business, take it to market, find product market fit, uh, raise capital. So it needs, we need to build deeper connections between Sheffield, Manchester, Leeds, Newcastle, Teesside, and London, and bring capital markets to these regions. I mean, what's amazing is when I've taken uh, capital markets from the city to Sheffield, they've been astounded at the quality. So almost always have invested. So that it's just an imperfect market, to be honest.
So how can you replicate what you've obviously done in the Sheffield area in Newcastle, Liverpool, and some of these other key centres?
It starts with local leadership. You have to have, you know, in Newcastle there was Sage. There are lots of leaders from Sage that could easily that understand how to run a public company, how to gain access to capital markets, etc. That could easily pivot lots of businesses in Newcastle and give them that kind of access. In Manchester, Manchester's actually doing a pretty good job of it today. To be honest, there's a big AI cluster that's building up in there as well. So um, I think a lot of it is building those deep connections to London. And people from London have to go to the regions. I'm sorry, you can't just sit behind your desk in the city. You actually have to go to the regions, I'm afraid.
And what about these people that have these ideas and they want to pursue them, but they can't afford to pay the broadband, the office costs, the all those initial costs of setting up. What's the answer to get them over that first stage of building a business?
I think the first principle is the business concept needs to be a good one. So nobody's going to fund something that's going to be DOA, dead on arrival. It has to be a really good idea that is capable of creating some sort of scale, some sort of capital in the future. And I think there is a role there for government to help get those businesses off the ground. I know there are a number of different schemes and things, but making them accessible to everyone would also be really good. I mean, it shouldn't be the people that get access to capital are the ones that have the expertise in filling out a form. That shouldn't be the qualification to get access to capital. Unfortunately, so many government schemes and so much of the government sort of money that's gone into venture has gone to people that really are worldwide experts at filling in forms, and that shouldn't be the case. They should be experts in running a business. And those people, so we have to change the way in which capital is allocated to those people in a way that rewards good ideas and brilliant entrepreneurs, not people that can fill forms in.
And that in itself is some form of alchemy, isn't it? Because how do you do that? Because the government's always worried about, taxpayers' money and how it's spent. And the private sector, the people that are operating that money generally haven't been anywhere near an enterprise or an entrepreneur in their life. So how do you make that work?
Well, you have to work with the private sector. You simply have to. And actually, the work I've been doing recently with university spin-outs is a good testament to that. So I've looked at maybe 20 different spin-outs from the Northern Gritstone universities. 18 of them, not for me. 2 of them, I think, are pretty good, and we'll probably make investments in them. Of the rest of the 18, maybe 8, I would say, would warrant some sort of some government funding to see if it can go to the next level. And I know governments don't like being in the business of risk capital, but you kind of if you want entrepreneurs, they're all about risk. So you have to, government has to provide some sort of risk capital to these people.
I mean, I guess some governments might push back and say, well, if they're entrepreneurs and they're risk takers, they should be getting on with it and doing it themselves. Why do they need government? Shouldn't they be avoiding government and government help?
Well, in the absence of a vibrant angel early stage investment community in the north of England, that's going to be quite tricky. Now, I would say it's building up, and government has given funds to early stage investors, but I don't think those early stage investors are good enough, to be quite honest. I think we need to improve the way that capital is allocated from government to those early stage businesses.
I mean, do you think there's any form of role for sort of innovation centers in major towns which basically operate free to budding entrepreneurs where you can go in, you can use the facilities, you've got a desk, you've got an address, you've got broadband, you've got a telephone, all those things that you need when you start, and you can't do it from your sort of your bedroom in your house.
Absolutely. There are so many vacant government offices where you could do that. It would be such a good use. And then also having guest speakers go in once a week to go and talk to people. And sometimes, I mean, I've had lots of people come up with, I've got this great idea to do this, this, and this. And it's like, oh, Google are already doing that. And which is disappointing for them. But at least they know early and they can go and figure out something else.
And the link into people like yourself who know about investment, obviously really important. In terms of the way the private sector works in this country, there's a massive differential between what happens in London and the southeast, and the number of businesses that are set up there compared to, say, the northeast. The northeast has a tiny private sector compared to other parts of the country. I mean, that's got to be a real worry to the government and everybody else. I mean, how are we going to get private sector companies to go and set up in those areas in the northeast and so on that are really basically vacant of them at the moment?
Well, I mean, the UK is relative to the United States is such a small geographic space that these regional differences just still, even though I've been back here for a few years now, astound me. I mean, it's so ridiculous. I mean, I my train journey from Sheffield to here was 2 hours and 2 minutes. I mean, that used to be my commute, daily commute in Silicon Valley. So these regional differences, A, should not exist, but the London focus is this self-perpetuating thing that we have in the UK, where capital, the source of capital is in London, and therefore it's invested, or it tends to be invested in London, which is ludicrous. It's so inefficient. Capital should be a heat-seeking missile for opportunity, but for some reason in this country, it's not. And if you if venture took a look at itself and looked at the valuation multiples between Newcastle, the example you just gave, north of England actually, well, outside London and London, they would it's stupid. I mean, it is so I mean, normally capital sort of automatically corrects itself to this point of equilibrium. So you get so valuations kind of meet somewhere. Here, you know, somebody turns up with a slide deck and they want a 20 million pre-money valuation because it's in London. That same idea, which might actually have customers and might actually have some traction, might be a 2 million valuation in Newcastle. So I think a lot of it is almost a forcing function to get people into the regions. I mean, we've got an event later this month, and I'm bringing up some investors from London, and I know that they will end up investing in businesses in Sheffield as soon as they see them. A lot of it is the guys up north don't know how to access capital markets in the south, and because they don't know how to access capital markets in the south, then the southeast doesn't go into the regions either. So you've got both parties just operate.
Sort of standoff.
Yeah, and it's for such a small place in relative terms, it's ludicrous.
Hmm. I mean, what do you see as some of the key? Because I mean, this isn't just small businesses and medium-sized business. I mean, it's when you're talking about inward investment. Inward investment hurtles its way into the southeast and London as well. So there's obviously something that's deterring, not just the local investment in the UK, but international investment from going into the regions as well.
Well, let's just say I want to invest in something in Sheffield. There are no stockbrokers. There are zero. And when my friend, who's a very senior stockbroker in London, came to Sheffield, they couldn't believe it. Now, I'm sort of working with them to open up in Sheffield to be the first broker in South Yorkshire, probably one of the only brokers in Yorkshire. So because there are no brokers, then you can't. The way that you get investment into a region is by having a basket to catch it, and there are really no baskets to catch it. There are no brokers actively out there looking for capital or investing in things in these regions.
Is it also about other things like infrastructure and transport links as well? Because a lot of these areas don't have such good transport links. I mean, Sheffield, 2 hours, 2 minutes doesn't sound too bad, but there are other places that are less connected.
The north of England, I mean, for me to get to Manchester from Sheffield is almost the same time to get to London, which is, for sort of a few miles over the Pennines is absolutely ridiculous. It really is. So we don't have very good transport links in the north of England. They're still largely broken. I think that is a barrier to a mobile workforce. It really is. I mean, to get people to do commutes that should be 30 minutes that end up being an hour and a half on some pretty abysmal trains on the Transpennine Railroad is just crazy. So yes, we need better transport links. We need better infrastructure, and we've seen places that have done this and benefited from it.
Can you think of any off the top of your head? Some like that?
Overseas, I mean, we were talking earlier about the effect that infrastructure investments had in Malaga, which is that a town turned from being vaguely touristy with a port to now being a tech hub. Is the transformation over the 20 years has been absolutely
Talk us through how they've done some of that, because obviously Spain is growing at a decent rate. We're sort of frozen in terms of our growth at the moment. How has Malaga and Spain managed to do what it's doing?
So they've invested heavily on infrastructure projects. We have a house on the south coast of Spain, and every time we go there, there is always some new infrastructure, whether it's sewage systems, water systems, going on. In Malaga, in particular, the tech park, the university, and then Google acquiring a cybersecurity business and then setting up cybersecurity center in Malaga has changed almost everything about the place. I mean, it's changed probably negatively. House prices are now going up quite dramatically. There are a lot of Europeans now, digital nomads and Europeans locating to Malaga. They've got the balance right between a really nice place to live with a high quality of life, good infrastructure, good connectivity, and now interesting tech businesses and that Google investment that they made will spring out so many other companies that come from that. In fact, already is. There's going to be a whole raft of new companies.
That's really interesting because what you're talking about is having some sort of anchor company, and then clustering, I suppose, around it. Now, we've known about clustering for a long time. I mean, not everybody can have a Google, not everybody can have a big tech come and anchor in their area. So must be other sort of non-big tech things that might suit different regions and different areas.
Absolutely. In Sheffield, BAE Systems are building a new plant as the UK begins a little bit of a process of reindustrialization, by the environment that we caused by the environment that we live in. And there's lots of interesting work around manufacturing tech that I think is super interesting and something that we're really good at. Material science is another huge strength in the region. So we should be attracting, with the talent that we have and the investment zones and everything else that we have, really great international businesses into these regions.
You mentioned investment zones, and there's also free ports and so forth. Um, Do you think that they are an effective way of sort of generating interest and companies coming into an area, or is there more that needs to be done to really cement that?
I think I think they do a good job, and there's evidence with I think wind farms up in Teesside and things that have been built as a result of the free ports. And undoubtedly for investors, the tax incentives, etc., that come with these is a really good concept. But I do think it has to come with a longer term strategy of economic growth built on top of entrepreneurship. And it's one thing attracting a company to come in, but then it's what do you then do when that company's there? How do you then exploit that opportunity? How do you grow it? And it requires connectivity from capital, the education system, and industry.
And I suppose that goes back to your earlier point about it has to be local leaders that do that. And do you mean by local leaders? Do you mean like the sort of mayoralties, like you've had Andy Burnham quite as King of the North, and you've had uh, Steve Rotherham in Liverpool and others around the country, or do you mean high profile businessmen in those areas?
I think the private sector has to step up. To be honest, I think it's people with vested interest, who want to live in a nice place, who want their region to succeed, have to work hand in hand with the mayoral authorities, with the local councils, in order to get the region going. I don't think, as Oliver Coppard, who's the mayor of South Yorkshire, is a really great guy and has put together lots of initiatives. But the mayoral authorities are not really, it's not really their job to be entrepreneurs. I think entrepreneurs need to step in here and help.
It's really interesting. So just sticking on the free ports and the employment zones. If you could give say to government, there are these two things that you need to add to what's already there. What would they be?
An employment focused agenda, I think. In the knowledge economy, it's about people, and we should reward hiring. And Invest Northern Ireland did a pretty good job when I set up a business there a few years ago, of incentivizing us to hire staff and retain them over a long period of time. And I think in the UK, which is a bit bizarre, I still find it a bit bizarre. The first question is often about a real estate question, as though all we need is buildings, and it's like, no, no, no. Let's focus on people and creating value, and think about the building stuff later, because the building stuff always appears first, and it should be last, really, on the agenda. And then rewarding intellectual property, because for long-term sustainable economic value creation, you have to be doing something that nobody else can. And the proof point of that really is in intellectual property and patents and things. And I think those two, and we do have lots of incentives around IP and IP creation, but I think there's a lot more that we can do in that realm. And that
How did they get you to employ people and keep them on in Northern Ireland? What was it they offered? Was it lower national insurance or?
so they part funded heads on a schedule, and in order to consume that, you had to be on track with hiring, and then it tapered off over a period of time, but you were committed to retaining those heads. And I thought that was a really good scheme because it was it was perfectly aligned with our strategy. We weren't doing anything unnatural just to get a grant. It was actually something that we wanted to do, but it made that zone a lot more attractive for hiring than anywhere else in the world.
That's really interesting. Do you think there's a role for some of these areas that where there's a lot of unskilled people, some of whom are long term sick and those sorts of things? Is there a way of incentivizing those people back to work by, for example, lowering the tax rates for those people when they're in work? So instead of charging, you get your first 12,500 free, but after that, for them, the marginal rate is quite high. Is there a way of encouraging those and making the benefit of the work seem much more realistic?
I would imagine that for those people who are on the margin of being able to work or not work, that a financial incentive where taxation was not going to be a disincentive should be something absolutely that we do. And to have especially skilled workers not in the workforce because of this is a great pity.
I was reading about the investment that PepsiCo has made in Lincoln. They've got a factory that makes quavers there, and they've invested £24 million, and they've completely changed the way production works. They're saving lots of the carbon footprint, on plastics and all sorts of things. So, in a sense, it's a factory making quavers, but it's innovating. I mean, how do you see innovation and and the use of innovation to sort of create jobs and opportunities for people?
So we're not looking actually for specifically companies that are developing software, which is how when we think of innovation, as you say, we think about deep tech, we think about algorithms, we think about people coding things. Technology, especially now, exists in so many forms, and there are so many interesting opportunities out there. I'll give you a quick example. Uh, I mentioned it earlier. We invested in a business that's now called Intellium AI. That was basically a team of people that were analyzing data from machines and making recommendations about how some of the world's largest food manufacturing consumer goods companies, FMCG companies like PepsiCo, uh, ADM, and others, Muller, how they can make recommendations uh, on how to better maintain their machines. Now, you wouldn't, in the traditional sense, call that a tech business. But when you arm them with artificial intelligence and their training algorithms, the net result of this is, for example, I think they're going to help increase the UK's milk supply by 5% without more cows, without more people, without more electricity, by using the specialized domain expertise and then training artificial intelligence how to do it. So I think the definition of tech, because of the disruption of AI, is going to change, or it has changed, but most people don't realize it yet, very, very quickly. I think that people in the mechanical engineering space, the material science space, those are tech businesses. But we just don't realize it yet.
And how do you think that skills fits into that innovation piece? Because obviously, we've got skill shortages already in advanced manufacturing and green technology and a whole host of other areas as we stand today, and yet we're going into this new phase of AI and much bigger technological challenges as well. So skills must play a part somewhere in all that.
Absolutely. In fact, those skills that were once probably, especially in engineering and manufacturing, that were valued quite low, now I think have quite a high value because those AI only works if it's trained. So you have to have the skills to train AI. That can't be done by a propeller head in Silicon Valley. It can't be done by somebody developing algorithms in the East End of London. That has to be done by somebody that has lived in a factory for 20 years up in Newcastle, Middlesbrough, Sheffield, Leeds, Manchester, etc. So this should be a renaissance for those skills, actually. We now need them desperately. We need that information from those people.
And how would you see us accessing those skills? Because it's so government programs don't seem to work in terms of connecting the workforce to what to private sector. Um, they try and make interventions, and there's going to be another attempt to do that through job centres. And you know, you've got to applaud anyone who's trying to make a difference and trying to change things, but they never seem to work. So, is it the private sector that has to do the skilling and the training as well? Really?
I think there is a role to play. So I had at one point a coding academy, and I was astounded to discover that in 4 months of intensive training, you can turn somebody from zero to be a fairly accomplished computer programmer in that 4 month period. And when you look at the underlying data as to why, it's because they gain more hands-on experience in 4 months than you do on a 3 or 4 year degree program. So that sort of is a clue. So as we need to pivot a workforce, I suspect those training programs should be made available to a large workforce very quickly. We need to mobilize that workforce really quickly and give them access to these tools and these skills. We've already proven it. If you give people with knowledge access to the right tooling, it's amazing what happens. Really is.
I mean, one of the things that's been suggested that is a problem in the UK is the number of regulated professions we now have, which is, although if you're a surgeon or a doctor, you probably want them to be highly regulated. You probably want to make sure that they're fit to do the job that they're supposed to be doing. But there are lots of other professions that are regulated, right the way down to the sort of levels of not really very high income. I just wonder whether you think that there's anything we should be doing with regard to regulating professions and deregulation.
Well, I'm not a big fan of regulation in the wrong places and regulation for the sake of it, and regulation overlapping more regulation just because we can. And I think particularly in areas where low margins, low incomes, it's just ludicrous that we have this. Plus, operating with a rule book where you have to operate with a rule book open so you know what you're doing is just crazy.
So, David, one of the big issues we've got in this country is investment in smaller businesses, and we've seen lots of small medium sized businesses even looking abroad for money. I mean, what are the best vehicles for getting investment into those companies at the moment, and what could we do in the future?
So the EIS funds are really full at the moment, and it's really the only tax efficient investment vehicle available to most people in the UK, and it's working extremely well. I mean, the if you look at the funds that are raising AS money at the moment, that they almost always raise it. They're almost always full, and they almost always overcapitalized and have and struggle to find investments to put it into. Um, but we still have a little bit of an issue in the UK with because EIS is of course very good for companies at a certain stage, but there's companies that are sort of an SEIS as well that works for riskier investments before that stage. Now, we do have a problem with small cap stocks in the UK that are chronically underinvested, and the AIM market, for example, a lot of companies there are really finding it difficult to raise capital on those markets at the moment. And that's certainly a little bit of a hangover post Brexit, but I think we have to look at some of the larger capital pools in our pension funds that really should be investing in our small cap markets, and how do we incentivize them to make small cap investments? And possibly we have to uh, carve out, say, 5% of those funds, put it into a much larger managed fund that is designed specifically to invest in small cap investments. And I think that is really important for us to have an efficient functioning market in the UK.
Well, look, we've covered an awful lot of ground today in this sort of just under an hour that we've been speaking. We've covered the whole investment area. We've just talked about small business and inward investment. We've talked about clustering and how that can help, and infrastructure, and particularly how you connect the regions with London more effectively. We've talked about skills and a whole lot of other stuff as well. So I think that I'd just like to say thank you, David, for your time today, and also for your contribution to the group. Um, there's an enormous amount of stuff that we're going to get from this podcast, let alone your expertise in the group as well. So thank you for today. It's been a real pleasure talking to you.
Thanks, Rob. It's been a pleasure.
So if you enjoyed today's Social Mobility Talks podcast, please help us by spreading the word, by sharing it amongst your networks. You can leave a rating on Spotify, you can leave a rating on Apple, or a like on YouTube. And you can also subscribe to make sure you never miss an episode.